Quantum has captured imaginations for decades, but real-world application has remained just out of reach. That is now beginning to change. As the technology approaches commercial relevance, Europe faces a narrow window to turn scientific leadership into global companies. Olivier Tonneau, partner at Quantonation, will discuss what it takes to get there. Please welcome Olivier Tonneau from Quantonation.
Hi everyone, glad to be here. And I like the way the title of this session is put. It could have been "Can Europe be a powerhouse in quantum?" But we prefer to label it as "How can we be?" Because we have all it takes to become a powerhouse and to be a leading player. But there are a few things that need to happen. And by the way, so I was this morning, here is a good place to speak about that because I was this morning visiting the clean rooms of Chalmers University, and I have to say that I've seen some tremendous research and very good startups coming out of this ecosystem. So another reason to be positive about that. A few words about us. So Quantonation, we started our journey in 2018, now reaching 300 million under management. Two main funds, one that's already deployed, a second one that we are closing next week, hopefully a bit above what we expected, so 200 million. We've invested worldwide in 35 companies, a big part of them, 2/3 in Europe. We've also set up venture studios so that they help us to build a nice ecosystem of sourcing. Because building quantum startup is hard, so sometimes going through a studio is important. Not going into a physics lesson there, but so this guy, Alain Spey, Nobel Prize 2022, he's a godfather of a fund because he was the PhD advisor of my co-founder, Christophe. And he was the one who proved that entanglement exists. And so not going into the whole detail, but just a few things you have to remember about quantum. The first one, we are using the properties of the matter at the elementary particle level. So that means we are playing with individual atoms, photons, ions, or electrons. The things that the properties that we use, first one is superposition. So that means a particle can be at in several states at the same time. Remember the analogy with the Schrödinger cat. The second one is entanglement, meaning you can have particles that are twins, regardless of the distance that separates them. And the third one is anything you do to measure or to look at those quantum systems will make it collapse. From those three properties, we can derive new ways of doing computing, and so that's the exponentiality of quantum computing. Also keep in mind that when you have a machine that's 100 qubits and you go to 101, you double the computation power. So soon when we get machines that are 1,000 and 10,000 qubits, then they will surpass in power what we have with the best large classical computers. Second one, we are using it for quantum communication. Entanglement can help secure communication against hacking. And the third one is the fact that when you measure it collapse, it is used to build some very nice and precise detectors. Here is our portfolio. So we've invested 35 companies covering all the scope of quantum technologies, but I will not spend too much time on that. The topic that we have today is how can we still compete in Europe, because this technology is identified as a sovereign technology. Being able to hack other computers thanks to quantum computer is something that will bring significant advantage. There are also advantages in the use cases that you can implement, drug discovery, portfolio optimization in finance, to name a few. So the question is, how does Europe fare? If you look at this graph on the left, this is people or countries selling quantum computers, and on the right you have people or countries that are purchasing them. The interesting message here is that Europe is supplying 40% of the quantum computers that have been deployed worldwide. So we are in the game, pretty much. We have some companies that are able to do that. So that's for the quantum hardware suppliers. Now, if you look at the users, there's been quite a lot of interest as well of countries purchasing quantum computers in order to use them and to start testing them, to develop algorithm, software, etc. So, I mean, looking at that, quite good. We have seen in the 8 years that we've invested probably more startups in Europe than what we have seen in the US. And they've developed very nicely. Now there's a catch. And the catch is this one. for quite some time, financing the quantum startup was around 2 billion per year. And the European startup were functioning with roughly a ratio of 1 to 2 money compared to the US one. Now what's happened last year is that suddenly there's a big surge to 10 billion finance for startup companies. Now over those 10 billions, there's about 7 billion going to US companies, 1.2 going to European companies, 1 billion going to UK, and the rest is rest of the world. So the question is, for 12 months now, we are starting to see a ratio of financing of our best company going from 1 to 2 to 1 to 7. So how long can we sustain that? And I guess it's not more than probably 12 to 24 months. The reason for that as well is that those companies with this money in the bank and the fact that some of them are now listed, they've started to do some M&A and purchase the best European player. It has started with a few companies in the UK, but we are seeing also some of our portfolio companies based in Europe being approached by US players. So the question is, if we want to remain in the driving seat, how can we deal with this situation? And it has to happen not in a distant long term, but really in the next 12 months. Otherwise, in 2 years, then our startups will be gone, or they will be underfinanced, resulting in lagging in the technology. So what can we do? A few ideas here. The first one is about what do we have to do in the real short term, because that's the problem we have now. So there is a nice, we have one of the best tools in the world with European Innovation Council, giving some grants plus equity, some nice program going at scale with STEPS program. So that's something that we need to use to the fullest extent. The second one is there has been also at EIF level some initiative to finance funds at larger scale. So being able to give 200 million to funds that would be in the billion or so, and that could drive and be lead investor in a significant size round for the best companies we have. Public procurement, and your HPC is a good example of that, will play a big role, and that's also why we're able to sell that many machines. It's because the public authorities are building it, deploying it in data centers so that people can start using them. And that's important, and it should be reinforced. Second, well, of course, there are some national initiatives in about every country. Second one, there's a very nice initiative that's underway. It's called the Scale Up Fund Europe that will look at financing deep tech, and it will be a single fund with 5 billion in order to be able to deploy 200 million, 300 million in the best companies we have in Europe in tech. So that will be a bit of quantum, a bit of all the other techs, robotics, AI, and others. But so this is very welcome. It will probably not be enough, but it's a very good start because it will be 5 billion that are available from this year. The fund should be alive in April. I think there's about 80 European management companies that are now competing on this tender, and the result should be communicated in this spring. I think we will also not do that on our own, so we need to be somewhat flexible with foreign capital. There are some big buckets of financing coming from the Middle East, coming from Asia, coming from the US, and we should learn to be flexible and to allow for this capital to be invested. Of course, there's probably some governance or security issue that will need to be negotiated, but doing without would clearly be a problem and would lead to our companies not being financed at the right scale. Also, maybe one thing to consider, there are a few, I mean, I know in Sweden, Spotify was listed on the NASDAQ. It's probably some way that something that we should explore for the best startups. I think we should not make the mistake of not exploiting this type of financing. The company can remain based in Europe with strong foothold in Europe, even being listed. Being listed in the US is just a modality. It's taking the advantage of where the money is. But it's also something that we can probably do better. In my opinion, listing on the European market is not an option for those large companies because liquidity is not big enough. So you cannot attract some significant size investor doing that. So US listing, keeping a strong foothold in Europe is probably also a good option. Now for the longer term, A few ideas here. Of course, we'll need to develop industry at scale. To do that, so VC industry at scale. To do that, we'll have to show some opportunities for exit, because every time we go fundraise, people tell us, okay, we will give you gross money, but tell me how are you going to sell those companies? And this is something we still need to have to work on. Other ideas around unified capital markets, it's been around for quite some time, European pension fund, all this will be necessary. I know it's going to take at least 3, 5, 10 years, but at some point, if we want to remain in the race, it's something that we will have to do. A few other ideas here around simplification of the market and also really implementing European preference for this kind of technologies. Well, that's the ideas on how I believe we can stay in the game. Thank you very much.
Most corporate venture units still fail fast, with an average lifespan of just 3.7 years. The challenge is no longer launching a CVC, but making it last. Jeppe Høier, one of Europe's leading CVC experts, has spent years working on exactly that, building corporate venturing that survives cycles and delivers strategic value. Please welcome Jeppe Høier, co-founder of EUVC's initiative to make corporate venture capital last in Europe.
So why am I here on stage? I'm here because corporate venturing is 25% of the volume in VC. I'm also here because the most likely buyer of the startup is a corporate. These elements is basically what creates the foundation of the success of all you VCs out there. We have one challenge. The average lifetime of a CVC is 3.7 years. Where does that then stem from? It stems from a lack of understanding of how to use venture capital as a strategic tool. We all in this room knows about the hockey stick on valuation. Most likely a corporate venturing entity will be closed down after 3 years due to lack of financial performance, or in year 6 as lack of strategic fit. A nice note from Professor Ilya Strabulev out of Stanford: a successful CVC entity is one that survives 3 CEOs. I'm here because I have a dream. It's always nice to have a dream and something that makes your heart tick. Brought up as a venture capitalist, having spent 5 years with Maersk Growth as a CVC, getting all the bias from VC and then trying to make a better future. In 15 years from now, I hope the European corporates will understand how to use this strategic tool. And that is the fight I'm on, also running the EUVC Corporate podcast together with Andreas. So, in corporate venturing, you need to get all 3 pillars right. The 3 pillars are build, buy, and partner. If you don't get these 3 pillars into your corporate venturing entity, you do not stand a chance because you do not know where the success lies. There's no such as a clear formula on how to build a CVC and a corporate venturing entity. It is about the culture of the corporate. So you need to get it right. There are 2 key persons that talks about these 3 pillars. One of them is Standard Chartered, and their CVC, Alex Manson, talks a lot about this, and his book is excellent. And then also the venture mindset of Ilya Strabulev touches on the same part. As a corporate, you need to be clear on why you exist. What is your purpose out there? Because if you do not have the purpose, the VC industry will not understand you. You need to bring it across the line to gain the support of the VCs, but more from your inside. Governance. That is probably where most of the VCs in this room, they tear out their hair, right? When is your next investment committee? Who is on the investment committee? How do you decide? So when you build your CVC, get this right. Communicate it clearly out to the ecosystem. And act like one, right? And and basically tell the VCs how you operate. Are you a lead investor, or are you a follower, or do you do seed rounds? What is your geography? Train yourself in speaking the words of the VC. And then finally, integrate. Understand how you partner with startups and be clear in the communication. That is what everybody is searching for. They're searching for a corporate that understands the startup perspective and how to do this. Very short for me. So that was it for today. Have a great evening.
Longevity sits at the intersection of serious science and persistent hype. As capital flows into the category, the challenge is separating what is biologically plausible from what is merely speculative. Paolo Pio, partner at Exceptional Ventures, will cut through the noise to explain where longevity science is real and where it isn't. And of course, how investors should think about this space with discipline. Please welcome Paolo Pio from Exceptional Ventures.
I'm curious to know, who here would like to look better, feel better, be thinner, leaner, in better shape? Exactly, everyone. Which is to my point, because we at Exceptional Ventures invest exactly in this space. We back companies that help people live healthier, longer, happier lives. My name is Paolo Pio, and I am the co-founder of Exceptional Ventures, an early-stage fund based out of London that we launched 4 years ago. Myself and my co-founder, Matt Cooper, who is the gentleman also at the bottom of the pyramid, in the middle. We did so because we have a very, very strong passion for these sectors. In fact, my background originally was tech. I worked almost 15 years at Cisco Systems. I was in California as a software engineer when I started. Then I did product, then I did sales. But really, all the way, I played football. I love sports. I went on the mountains. That's where I'm from. I'm originally from Turin in Italy. Now, I know that my accent, it's almost, it just does not give it away, but that's the case. And then with time, this passion really became my main job when I started working in 2019, leaving tech for a health tech fund called Join Us Partners as their medical managing director for Europe. Not medical yet, unfortunately. But really, I spent a lot of time reading about this space. And same with Matt, who co-founded a bank in the States called the Capital One Bank, and went on to do more than 200 angel investments in the UK, and chair one of the largest UK companies called Octopus, which is a 20 billion company now. So together, we built a team of people that are equally as passionate about these topics, and really, we want to support these industry, this space. And I love this conference, which is around deep tech. Andreas invited me to GoWest, and I thought, well, it's a wonderful space because there is a lot of overlap between deep tech and health tech, as we will see in a second. In fact, we talk about joyspan as the conversation started in the industry around lifespan. So how many years of life we live, but really then moved into health span. Okay, fine, we're living longer, but are we sick and frail, or are we actually healthy? And then into joy span. How many of these additional years we actually can enjoy life? Because one thing is, if I give up everything in the pursuit of longer life, there's people that eat 1,100, 2,000 calories a day, go to bed every night at 8 p.m., have their last meal at, in the morning, transfuse their own son's blood in the pursuit of living longer. What kind of life is that, right? So that's really what we want to do, is to promote joyspan, and to do so with our efforts, with our capital, and supporting founders building in the space. And this goes back to the history of man. We've been wanting to live longer forever, right? Going back to Ponce de Leon, all the way to modern vampire-looking longevity seekers. And I want to make the point and argue that this is strongly tied to technology, deep tech, or tech in general. In fact, you can see the life expectancy has increased hugely at certain specific points. For example, when we discovered antibiotics and vaccines, there was really a step change. And with the advent of modern medicine. So really, technology has been accelerating hugely, right? Over the last 100 or so years, there's been a huge number of discoveries that improves our lives and our health so much. For example, take the Human Genome Project that in 2003 took billions of dollars and 20 years to decode the first human genome. And now it takes, a few $100 and a few hours to do the same, right? Only 25 years later. So really, technology has been moving at incredible speed, and so is health. And so that is the entire point. Health is something that historically has been improving very slowly, right? With biology, with cells, with doing experiments and waiting. Well, now has been jumping on, has been moving at the speed of tech. And we know that technology improves exponentially, and we are now on the steepest part of this exponential curve. In fact, just in the last 5 years, these are some of the things that happened. You guys are all familiar with the mRNA vaccines for COVID. The moment we saw the new virus, it took 60 days to have a vaccine able to fight it, which is super impressive. But even more impressive is that now it would take 60 hours, right, with the new technologies, which is mind-blowing. Weight loss drugs, right? I mean, forever we'll be wanting to be lean. Well, now we can just inject ourselves, and that's the case, right? It is an incredible, in a way, achievement. But this is just the beginning. So it's going to be, over the next 5 years, it's going to be even more advancements in health, and even faster, right? We'll be able to connect to the cloud through brain-computer interfaces, right? We're going to have personalized medicine. That what it means is that the next vaccine will be personalized to me and to my DNA and to my living condition, and will be different from the one that will be yours, right? And which will be particularly effective for your DNA and for your living conditions. So that's really what we are investing on at Exceptional Ventures. And the point I want to make is that health is moving at the speed of tech. Number one, tech accelerates exponentially, and even more so within tech, AI has been really taking over. In fact, and health is a wonderful application for artificial intelligence. Of 11 AI unicorns in Q1 last year, 6 of them were in health. And of course, money follows, right? We started investing in health almost 10 years ago. We incorporated Exceptional Ventures Fund 1 4 years ago. So back then, we used to say, health tech is the new fintech. At the time, health tech was at the middle of the pack. But actually, last year, for the first time, it has indeed become the case that health tech was the most invested sector. So capital is following, founders are coming, and so are the charlatans. And hence why what we stand for at Exceptional Ventures is science, is data, and is helping consumers differentiate between what's real science and what's pseudoscience. What we invest in at the fund, as mentioned, is all driven by the mission to help you live longer and better. So we have a very strong preventative angle. Ideally, you want to be well, keep well and be healthy, and these are the pillars to do that. At the same time, if you fall sick, you want to catch it early. So we invest in early detection and diagnostic. And then, if we really are sick, we want to provide smarter care and delivery. So using technology to access every person around the globe in every, lost, hidden cranny, right? Using technology to make it cheaper, more widespread, to have care access. So these are the things we focus on. In fact, not just we believe that this is a fantastic sector to be building as well as investing in, but also we think that we're building a new model of venture. Matter of fact, we don't see ourselves just as venture capitalists. We believe that we look at ourselves as we look at our founders, right? We are driven by values. We're building a company from zero, from scratch, which is based on kindness, is based on values such as reliability, such as passion and curiosity and being knowledgeable. So we are founders ourselves. Happens to be that our skills is related to investing and to help others build companies. And these drive the way we operate, right? With our founders and with our LPs, we work with integrity, we add real value, we support our companies so that they can be more successful, provide better returns, and in turn attract more LPs, better LPs to what we build. And so further our mission to attract capital for the best founders to make our lives better. So really what we think is we're building for the long term. We started 4 years ago with our Fund 1. We just launched our second fund end of last year. And again, I have to thank Andreas and EUVC as they backed us with an SPV, became LP into our fund. So thank you again. But really, we're just getting started. Our vision is to build this over the next 10, 15, 20 years and really building the leading health, wellness, and longevity fund in Europe, if not in the world. And we want the best entrepreneurs that are building in these sectors to come and work with us, get money from us, and support us. And we support them building fantastic companies. We want LPs that have conviction around the sectors of health to back us. I think we offer a fantastic way to access these sectors. I think we are really riding and driving an incredible revolution in health. And so with this, thank you. Again, I believe deep tech is extremely exciting. And within deep tech, I'm here to make the case that actually health tech is the most exciting part. Please come and talk with me. I'm keen to chat. Thank you.
Sports is now a global business shaped by media rights, data, and new ownership models. Fergus Bell from the Players Fund and Prashant Agarwal, CEO of Soneki and boardroom member at Liverpool FC, offer an insider's look at what actually happens off the pitch, where value is created across teams, leagues, and athlete-led platforms. Please welcome Fergus Bell and Prashant Agarwal.
Prashant and I are trying to give some indication and an illustration of the athletes and rights holders' new role in venture capital from two different lenses. Myself, very quickly, we launched the Players Fund, which is the first athlete-led VC fund. We have about 200 athlete LPs from all around the world, and we focus on a very different value creation mechanism. Everyone thinks about social posts and billboards. Our whole USP is that at the pre-seed through to Series A, these individuals add meaningful value through their networks, through the C-suite connections, the politicians, the ultra-high net worths, and the other public figures that they know. And so they play a very unique role in amplifying these early-stage companies. And passing over to Prashant, who's had the experience with sporting rights holders, as to how sporting rights holders also play a new and very key role in the incubation phase of early-stage venture.
Thanks, Fergus, and a pleasure to be here. Special thanks to GoWest for hosting this fantastic event. Andreas, you as well, thanks to you. Myself, Prashant Agarwal, I'm an Indian origin. Sports has been kind of my lifestyle, or I've dreamt of sports since a kid. I was born in a cricketing world, but football was always a dream for me. And my journey, very separate from family business, which has been more into infrastructure and construction and mining, ventured into sports side as well as one of my first own startups in India, where I've dealt personally a lot with the world of football and what role does image rights, TV rights, and so on play in the day-to-day world. I represent Scandian. Scandian is more of an infrastructure company. Here based out of Sweden, Gothenburg, where we acquired Serneke International and Elofansen International. Two worlds very different from the sporting world, but me and Fergus were brainstorming that sports is a catalyst. It's kind of an integrator. Sports is not just one particular sector. It's in fact a universe in itself. Sports integrates into politics. Sports integrates into common people like us in their lifestyle. Sports integrates into IT, health tech, fintech, medtech, you name it. Sports is there at the epitome of each and every business, and every business requires and uses sports as a platform to promote or to raise even investments. And me coming from more from an investor's family, or myself being an investor, I've also done kind of a startup in India long back, which was the first OTT platform in India called Vecta. And Vecta was way before even we have had Via Play Sports over here, where I kind of started gathering the rights and launched Vecta in India in 2014. And the idea came just with the pure size of the market in India in terms of going ahead and showing live sports over an OTT platform, where we acquired the great McGregor and Mayweather fight, and it was a pay-per-view. And within just 1 week, I acquired 23% of market share in India, and I took an exit in 2017 for almost $60 million on Vecta by selling it to World Sports Group. And that's the beauty of sports, rights. And when you smartly acquire certain kind of rights, what role and impact it would play. As I'm saying that today, I'm also sitting in the boardroom of Liverpool, an English Premier League club, and we often discuss about sport because we don't look Liverpool Football Club as just an English Premier League club. We look at it, how do we make impact on the social side, where we impact people's livelihood, where we make difference to people, where we talk about gender equality, women, men, what kind of roles do we play, what kind of ambassadorial role it comes into picture. I'm just returning from last week in Davos, and in Davos itself, we saw the likes of Sir David Beckham to Steven Gerrard being present in some of the stands with Standard Chartered Bank to IMF, and discussing how sports is kind of integrating the global economy as well.
So it's a valid point. A lot of people always ask me, how on earth did athletes end up as angel investors? And there's a very common maybe misconception, which is they throw money at stuff they like the look of. There's a clear evolution of the athlete or the celebrity investor, if you will. You get the early angels of the West Coast typically tapping into Silicon Valley, the Kobes, the Shaqs, the LeBrons of the world, largely through relationships with GPs. And what you find, it represents an arbitrage opportunity whereby their access is far superior to their sophistication, if you will. So they're able to participate in the Googles, the Ubers, the Airbnbs of the world through those channels. It then evolves into syndication through the 2010s and 12s. We see Serena Williams, Dwayne Wade, Aaron Rodgers bringing teammates into deal flow, really correlating with the rise of social media, realizing they can amplify what is typically consumer-facing stuff. But naturally, these individuals become more sophisticated. They diversify into B2B SaaS, cybersecurity, and thus the third and final stage is them launching their own funds. Kevin Durant, Aaron Rodgers, Steph Curry, Serena Williams, Maria Sharapova, and we have seen that play out over the last 15 years, but naturally it taken to Europe a little bit later. So to answer the very common question is, how do athletes end up here? And really one for Prashant is, rights holders like Liverpool, you mentioned you're on the board there, they now play a key role in being amplification channels for early stage technology. Liverpool's relationship with Google DeepMind and building of the Tactic AI. Could you tell the room a little bit about how an organization of multifaceted verticals can amplify young technology and young teams as they're iterating?
No, absolutely. I mean, deep tech has been one of the key discussion points in the sporting world. People often just see what is visible on their screens, but they don't understand the science behind it. Sports in general is very much into the world of deep tech. Even before Liverpool got into the tech world, I would say that somewhere sports science came into effect very much in Europe, and that it started from Milanello, which is from AC Milan Football Club. And AC Milan Football Club back in early 2000 started investing in Milanello, which is a lab which heavily invested into sports science in terms of trying to understand how do they identify player injuries, how do they help players recover faster, how do they even go ahead and do talent identification. And today we are seeing use cases which are actually into implementations with the new AI world, where we are using AI cameras even to go ahead and identify talent around the world. We are going ahead and using AI-related cameras when an athlete is actually performing on the field. What is his efficiency? How he has slept yesterday night? To what kind of maximum percentage of his output he would be able to deliver on the pitch today. So coaches go ahead and use these kind of technical aspects while deciding their squads today. And we are able to predict even player injuries as well as their recovery much better than what is happening earlier. But from a sporting world perspective, how do rights holders or people bring in valuations? I would also like to take classic examples other than my own club, Liverpool Football. Let's look at Qatar Investment Authority. They invested in PSG. People had underwritten that PSG would never win Champions League till last year, where PSG played a very significant role together with Qatar Investment Authority, because Qatar also invested in a similar concept like Milanello in Aspire Academy, which they have built in Qatar. And this is again a sports science lab where Qatar as a group, they went ahead and acquired the football club. They have acquired other football clubs as well. And they are using AI, they are using deep tech, they are using medtech in order to identify talent, and they are trying to amplify. I'm not sure how many of us have seen the movie Moneyball, but Moneyball was not just a real-time story, but it is being practiced in each and every sporting vertical today, where data analysis is playing a very key important role, not just in managing the budgets of the club or identifying the talent, but as the previous speaker, I forgot his name, I'm sorry, he said that most of the unicorns are coming in from the health tech world, and health tech and sports have a direct correlation, because athletes, may it be Sir David Beckham, Lionel Messi, Ronaldo, you name it. Today you see them as brand ambassador, advocating several brands on health tech and medtech side as the core investors or even as the brand ambassadors. Look at Roger Federer with his brand of QC boots. It was a very smart initiative done by him. He himself said, I don't want to endorse another brand. I will create my own brand.
And lots of people think, obviously, that investment plus IP goes hand in hand, and ultimately that should never be the case for early stage investing, which is what we advise our athletes. It's a dual risk. One of the key trends which we're touching on is that you're now seeing, such as the amplification of sport, we're now seeing sport as somewhat of a luxury good. I think the stat is that the price of live sport has increased 300% since 2021, and we've moved from the, let's say, the era of stuff to the era of experience, where people are willing to spend more. And the trickle down of that is this trend of football clubs, large sporting rights holders now wanting to participate in the grassroots of technology. And such as their training data set, for example, is deeply valuable. They're collecting computer vision data. They've got retail, they've got merchandising, there's broadcast capability. Beyond that, there's so many opportunities to extract value from these assets that actually they were just laying as latent and dormant amplification channels. So anyway, moving forward, and I know we're nearly out of time, if we look at the future of sports and as it continues its trajectory, and this might not be necessarily relevant to the early stage, what do you think? A lot of talk has been made of, say, American owners moving into the Premier League as a current trend, but do you see any particular opportunities in investing in sports all the way from either the ground up, grassroots, technology level to acquiring assets or IP at the top end?
Yeah, absolutely. I mean, I'm without being biased. Today is, of course, an historic moment for Europe in general, because we in Europe, we have managed to sign the mother of all deals, what we are calling it as. That is the EU-India Free Trade Agreement, which is opening almost 9,500 tariff channels. And
does it bring cricket to Europe?
Yeah, absolutely. Why not? But at the same time, it is giving us as Europeans an access to market, which is going to contribute almost 1/3 of global trade and 25% of global GDP. That is what we are going to deal with through this agreement. But talking about investments, as I gave the classic example of Vecta, just a $1 million investment with an exit value of 60 million plus.
IP.
Yes, and that is back in 2017. If you look at it today, I mean, in the world of deep tech, AI, with quantum coming into effect also, we require use cases, we require applications, and these use cases and application will happen in a market where there is a population of 1.5 billion and with 5G mobile users as many as 1.1 billion 5G mobile users today. We don't have full 5G implementation in entire Europe even. So as an early investor, get into a market. I would take, let's say, ice hockey rights from Scandinavia and try to launch it in a market which is having 1 billion plus TV viewers. And in day one, my IRR might not be even 5% or 8%. But over 4 years period of time, if I'm able to have eyeballs as many as 400 million viewers, I have built a valuation, and that is the right time to bring in investors and take in an exit at an IRR of probably 200%.
Yeah.
So that is those are the kind of markets. Yes, Americans are getting into the Premier League, but at the same time, we need to start understanding the new geopolitical aspect as well. And really, AI is going to play a massive, massive role in future. Together with quantum computing, we need to look at use cases and use cases where we are able to practice it freely, bring in R&D, bring in evaluation, look at what kind of consumers we want to focus in. And in any tech investment, it's the aspect of valuation. How do we bring in that value addition by minimum investments is what any investor wants today. And from that perspective, I truly believe that in markets which are emerging, where we want to look at scale, because without scale, there is no real value. And this is what these kind of deals, these geopolitical aspects are going to help us.
IP, do we think there were any nervous Premier League owners whilst Trump crept closer to Greenland after the last couple of weeks? Anyway, I would second that. I think one of the great opportunities now as the two worlds of deep tech and sporting and elite performance converge is in fact in IP. You have the ability to replicate high-level IP now without asking the athlete, as I know, babysitting sometimes, asking the athlete to support a portfolio company or do a voice note or ultimately lend their name, image and likeness. So I think that very much plays into the globalization piece with the India trade deal. So here all night, happy to take questions. I know it's a bit of a niche corner of the investing landscape, but thank you so much for listening.